Welcome to the Techno Fundamental Report for December the 5th. Dual income, no kids, DINK. A household with two incomes and no children. The reason I mention this is we're noticing a change in spending by the millennials. They're spending more on travel, and we're seeing a lot of strength in the travel stocks, such as the airlines. Now, we always look for disruptive technologies, anything that is a major breakthrough. And if you go through history, you'll see here how many breakthroughs or major events there have been throughout the years. And if you go back and look at the bear markets and realize that the recovery time, 19 years, 25 years, 16 years. So the key to this point is I always look for the new technologies, the new things. Ikimoto Cloud is an interesting study, and I've been working on this, and so I wanted to look at a group of them, a group of charts. This is the equally weighted S&P 500. Now, the thinking here is that you always want to be looking for a cloud that turns green after being red, which is, you can easily see this is the case after the bear market that we had back in 2022. Now, let's look at a couple of groups here. Here's the consumer discretionary stocks. You can see a very strong uptrend. Now, the thicker the cloud, the stronger the uptrend. Here's the S&P 500. Again, going back to the bear market, you can see where the cloud went from green to red, and then we went from red back to green. And so we're in a strong uptrend at this moment. Technology stocks, you can see as well, the cloud is definitely green, and technology stocks continue to look strong. The financial stocks, the banks, insurance companies, again, you want to see a strong group here, and this price action is quite powerful. Also wanted to look at just, a difficult period. This was, again, the bear market back in 22. You can see here just kind of a snapshot of how we went into the red cloud and would have pretty much told you this was not a good time to be investing in the market. This is the Korea Fund. I wanted to mention this because there's been a lot of news about Korea and military law and so forth. You can see what's happening to that market. It's definitely going into a red cloud, which is somewhat negative. Now let's look at the power index. Here's the power index, continues to be in play here. You can see the NASDAQ making new highs. The power index will stay intact as long as that 21-day stays above that 50-day, which is clearly the case and looks pretty good. Here's the S&P 500, same thing, where power index is definitely in play here, new high. So the whole idea behind the power index is slow your turnover down, try to be somewhat more aggressive. That's the point of it. Now here's interest rates. We're still seeing interest rates kind of rolling over here, starting to stabilize. We have a Fed meeting coming up. We expect them to cut about 0.25 basis points. You can see here on the power index, it's staying below zero. It's at a -5. So it just basically says that interest rates are really starting to stabilize here. Primary trend continues to be up, a 200-day moving average and a very strong uptrend. New highs on both indexes, looking pretty good. Aggression index actually hitting or eking out a small new high there. Again, the aggression index is where we're comparing growth stocks to consumer staples, things like toilet paper and toothpaste. And as long as this line continues to move higher, it says that basically investors are being very aggressive right now. So if you have any questions, please let me know. Thank you very much.